Hi, I'm Bert Nussbaumer from macrobeat.co.uk. This week had been the Fed meeting, which we've been waiting for, but clearly, in my opinion, the Fed did under-deliver. It was actually surprising to see them revise down unemployment data, revise up GDP growth. There was no extension of duration. And so we did have a brief spike in the dollar, a brief dip in equities, but given the sort of the lack of dovishness would almost have made it a little bit hawkish, but the market didn't respond, which really tells me only one thing about the market now in December, which is positioning. That's the only thing that it really told us. The market is probably not as short dollar as we would have thought. Punters are probably not as long equities as we thought, because otherwise there was a clear window of a bigger dollar squeeze and a bigger sell-off in equities based on the result of the Fed. But what it shows as well, we talked about it a few times, the central banks are probably at the end of the road. All they do from now is cosmetic. The only thing that really can bail out Main Street now is fiscal help. And in the US, that is still really hard to come by. But that's really, on the other side, sadly, we still have the one big story hanging over us, Brexit, the B word. We still haven't done a deal yet. Again, it looks like it's Friday again, which means the news this week has again been more towards a no deal. So we're going to have another weekend risk in terms of the accidental no deal, or actually an official no deal by Sunday this weekend. So that is still all in the open. On the data front, what we continue to see is what we've seen in the last few weeks, which is US data is getting weaker. We get a constant weaker US data, while the European data continue to surprise on the upside. Very strong PMIs this week, very strong German IFO today. So that chart I showed last week continues to widen, which is Europe outperforming the US in terms of growth, which obviously translate into the euro dollar. Last but not least, even though we're grinding down to Christmas and New Year, right at the start of 2021, we have January 5 as the big event, the runoff in the Georgia Senate race, the two seats up for grab that could turn the Senate from Republican to Democrats. There is obviously, the bond market will have a very close eye on that. 10-year yields have tried to push towards 1% already a few times in the last few weeks. If the Democrats were to win the Senate, I think the bond market would probably have a bad start to the year. We could see 10-year yields really breaking 1%. And then the jury is out what it really means for the dollar. Dollar yen, for example, could really suddenly start to charge higher, which probably would be a surprise for the market, given what a majority of market expects more dollar weakness into 2021. But I have a few charts for you. First one is just cable. This is just leading on what we discussed about Brexit. Dollar weakness is really behind most of the move up in cable that we have seen. We've gone above 136 this week, just stopped shy of this key 136.77 level. Same as I said last week, no deal Brexit, cable is going to just get absolutely destroyed. How low? We shall see. 125, 120, I wouldn't be surprised. Top side on a deal, I don't think there's that much left. We just probably grind higher together with the dollar weakness. The next chart, this is now the monthly chart in euro dollar. I show this all now and then. Since a few months, we are above this big triangle of the last 2 decades. Clear target on this one now is 125, which we could see as early as in the run up to end of this year. But only obviously a no deal Brexit could derail the process. On the next slide, this is the DXY. We talked about this quite a few times this year. Finally broke 91.90, finally broke 91, then broke 90.50. Now we start to sort of grind below 90, and without really a no deal Brexit, I think the dollar will just continue to grind lower. I don't think it's going to be an explosive move. I just think it's going to be same pattern as now, just a grind lower. Last but not least, this chart looks really scary. It's a Dow. We are in the middle of the Santa rally, which I think will probably not get derailed. Again, no deal Brexit would be the only thing that could derail the Santa rally. And then it's going to be really key into next year. But for the last part of this year, I think equities are just going to hang in there. This is it for me for today. Thank you very much indeed. Bert Nussbaumer, macrobeat.co.uk. Have a lovely weekend. Thank you.